Meantime, I think this is actually the story of the morning in so many ways. The Trump administration reportedly now looking at steps it could take to reduce the influence of proxy advisory firms like ISS and Glass Lewis and index fund managers, including Vanguard and BlackRock. The Wall Street Journal reporting that one option could be a broad ban on shareholder recommendations. Another could target recommendations on companies that have hired the proxy firms to do consulting work. That's a conflict that we've talked about on this broadcast that other CEOs have talked about as well. Additionally, the report says the Trump administration is looking at forcing index fund managers to vote on proposals in the way their clients vote. I think that's a little more problematic. My own opinion there. Proxy firms have faced heavy criticism from corporate leaders, including Elon Musk, who called them terrorists. Jamie Dimon has made some comments over the years just about the influence and some of the conflicts, one of them being this idea that, you know, if you're playing on both sides. The idea, though, I don't know where you guys land on this. To me, the idea of either preventing them from making recommendations, I mean, there is a First Amendment. You should be able to do that. I have no problem with that. I think getting rid of some of the conflict part of this is important. But also the idea of taking away the vote from a BlackRock or a Vanguard or somebody else and just saying it's up to the individuals who are trading or who own the shares.
Idea. So do I.
Yeah. So it's interesting that you say that. The default, what happens then, I think, could be wrong.
They just go with the company?
Most people, unfortunately, don't vote at all. And so what effectively you're doing by default is giving, you talk about who's got the power, you're giving more. This is a trade-off. Who do you want to have the power? Do you want the management to have the power, or do you want ostensibly Vanguard and these other funds should be representing the interests of the shareholders? That is at least ostensibly what they should be doing, which is different to some degree than what the managers necessarily are doing. And it's not always aligned.
I just don't like that. I don't like giving them my power.
Well, no. But just to be clear, Vanguard, BlackRock, all of these funds, if you want to vote yourself, you have every right to vote yourself. You can go on and vote now. Almost everybody's
most people don't.
Almost everybody's giving you the right to. It's not that they're taking your vote from you.
But most people
It's just that most people are not.
I just don't want them speaking on my behalf.
No, and it goes back.
Then that's it. If you're saying that you don't want anyone to speak on your behalf and you don't want to vote, then what you're saying is you want the management.
But I don't want them to. I don't want them to. If I choose not to vote, that doesn't mean I'm giving you my vote.
Right. And the late great Charlie Munger even said, "Who made Larry Fink king?" And there was a time when he at WEF or somewhere he said, we need to force behavior about, this happened to be about climate change and whatever you believe about climate change. Okay, but he was voting for activists that were forcing fossil fuel companies to do stuff based on Larry Fink's ideas and his own personal woke ideas about climate, which he's totally backed off.
I'm hearing you. My question to you, though.
I think that was just egregious and ridiculous.
Okay. My question to you is a different one, though. If you're saying that you don't want to vote.
No, I'm not saying I don't want to vote. There are times when I do vote. By the way, I have money in all of these places, too. There are times when I do vote. But if I choose not to vote, it doesn't mean that I'm giving you my vote.
But I think then there's a question, which is I would think that you should be able to give the vote to the firm or not, and that should be an option.
But it shouldn't be an opt-out. It should be an opt-in if I choose to give you my vote, and that's
a question
to do that.
And the question is whether you think that
to give that vote to anybody.
I appreciate that. The question is whether you think that most Americans whose 401k plan is effectively being managed by these funds, and the reason you're having a target-dated fund, for example,
which I would never invest in.
Okay, but there's a lot of people that have target-dated funds or have S&P funds in their 401k plans or other things that are being managed, and the reason you're using them is these are the firms that you're hiring to do this.
No, these are the firms my company are hiring, so these are my choices in my 401k.
Well, and that's the question, and the question is whether they give you, if you get the choice, you can use the choice. And if you don't use the choice, whether the firm should be able to have that choice.
But it should be an opt-in, not an opt-out.
Right. And if you decide, I like this company, I want to own it, I like what management's doing, I'm long their stock, what's the problem with defaulting to doing, to where the company has more influence than some outside proxy firm that might have all these ridiculous notions in their head?
I just think the conflict piece
I immediately think about CEO compensation.
Let's get rid of the conflict piece.
Okay.
Let's start with
are you talking about CEO compensation, that you don't want that rubber stamped? Or are the corporations always doing something bad, trying to put something over on shareholders?
But the question is, who is arguably going to have more of your interests? The management, this is the trade-off. Is management going to have your interests?
If they're aligned with the shares going up like you are, then they'll have it.
Well, hopefully, but the question is, who's looking out for you? Is it going to be the management, or would you like to have somebody else do that?
You put your money into that stock for a reason because you like the management, you like what they're doing.
Sure, but most of the people are not putting their money in each individual stock. So I just want to lay one issue out so everyone's on the same page. The reason why people don't vote, and the reason why this is an issue, is most people have money in their, an S&P 500 fund,
right.
And so there's 500 companies in that fund.
Okay.
Each of those companies has a proxy vote every year that could have a dozen or 20 different elections that have to be made. Most people do not have the ability, time, resources, energy, or effort to look through those votes.
Agreed.
And so then the question is, if you're saying that you just just blindly say whatever management says is great, go with God.
No.
That's one view.
But it's not whatever the proxy owners say.
Right. I would defer to them. I defer to them before your friends in the proxy. I'm
not talking about the proxy guys. I'm just saying that ostensibly what you're trying to do is the reason people hire people to manage their money, to do things for them, is because they are spending money and resources to try to look at each individual issue, arguably for you. Now, again, you take the conflict piece out. You take the conflict piece out of it.
Index funds.
But the reason I invest in the S&P 500 is because I don't want to pay somebody a lot of money to manage that stuff.
And I certainly don't want.
Look, there may be times when I would agree with the proxy firms on some of these things. There would be times I would agree with management, but I would like if I'm not.
But I'm not taking your vote away.
No, but I'm not blindly giving it to them either. If I opt into that, fine. But they should not. The default should not be that they get my vote if I don't take it.
And so how would you like that to work? Because what's going to happen under your scenario is people will have a 401k plan when they're first enrolled in the plan.
Yeah.
25 years ago, if you're starting somewhere,
right.
they're going to have a checkbox that's going to say, would you like me to do it or would you not like me to do it? Some people will just check it blindly. Some people won't check it blindly.
And that's the thing with opt-in. You're going to get a much smaller percentage of people who are doing that, and I think that's okay.
And you think that's okay?
Yeah, I do.
Because then, and even if they never vote again and never touch it.
But again, it's like, who do you put your blind trust in? Do you put your blind faith and trust in the head of the proxy firms or the head of the management?
Your default is, it seems to be that the corporation's trying to put something over on you, and you need some.
But
can I ask you a question? If you had a contract, of any sort, I assume you would have a lawyer look at it for you. Maybe you wouldn't. But the reason you'd have the lawyer look at it for you is because ostensibly they work for you.
Right.
And ostensibly, they are trying to look out for your best interest because the people that you're buying the product from hopefully do. By the way, like I think when I buy a pair of sneakers, I hope that they have my interest at line.
That's how you see an index.
But they might not.
You see an index fund manager in that light? I don't at all. Put the stocks in there.
Make the market.
Put the stocks in, make the fees low, and I'll take my chances. I'll handle it. Do not be voting your own ridiculous notions with my stuff. You're not king. There was a no King's Day. Don't forget that.
And Joe March.
Yeah, but you recognize who you're making the king then?
The CEO.
Bingo.
And the board.
Bingo.
I trust. That's why I'm buying their stock.
Okay. And you're not choosing to buy
I'm buying American business.
We'll be right back.
Go for it.